Hello everyone, I'm Riddhi Miglani and we are talking about the Economic Survey 2021 and continuing our discussion on volume 2. This time we talk about fiscal developments. Now fiscal developments is nothing but we talk about what was the government's policy expenditure during this current financial year 2021. In the backdrop of an unprecedented crisis, the year FY21 has been a challenging one on the fiscal front. Of course, see, we understand that we have limited resources at the end of the day. And if we see that printing of currency has its own repercussions in the long term. So we have to keep everything in mind and then take a decision. In order to cater to the increased demand for resources, the target for gross market borrowings of the central government for the financial year 2021 was revised from the budget estimate of 7.8 lakh crore to 12 lakh crores. So this means that this year's current year's financial current financial year's borrowings are at 12 lakh crore rupees. Now, the global economy experienced an unprecedented crisis in the year 2020. And amidst the face of shock and uncertainty, massive fiscal measures amounting to 12% of global GDP. Our global GDP is at $80 trillion, and 12% of that would mean close to $10 trillion. Our India's GDP is at close to $3 trillion. That means three times our GDP. That was taken globally to mitigate the adverse impact of the pandemic. The fiscal policy response of the government of India to the pandemic was distinct from other countries. Of course, we all must understand that each country has its own set of problems and each country would face a different problem. And so we have to address it accordingly. And in fact, in stock markets, also this holds true in the sense that each person has a different way of investing and trading. So we have to take care that in mind and we have to find what suits us and we have to choose that path. Now, we see that the approach was to provide a cushion for the poor and vulnerable sections of the society and to the business, especially the MSMEs, that is your micro, small, and medium enterprises, in the initial phase of the lockdown. Now, during the initial phase of the lockdown, what happened was that the poor ones, of course, those people who are dependent on their daily wages and they do not have any savings, of course, if they are not able to work, they are definitely in a dire need of help. So that is why they were given help. And to the business sector, that is the MSMEs. See, the corporate sector, like the private companies or the big huge companies, they can take care of themselves. See, these guys got an idea in any case that they will have an impact on the top line, that is the revenues. So what they did was they got into cost cutting, and that is how they saved their bottom line, that is the profit after tax. But with the MSMEs, they of course needed a helping hand, and this included the world's largest food program, direct transfers to Jan-Dhan accounts, as well as government guarantee for credit, postponement of financial deadlines, that is our moratorium period, with a gradual unlocking of the economy. So this was during the lockdown period, and then with a gradual unlocking of the economy, the focus of the fiscal stimulus has been widened with various measures taken to boost the domestic demand, such as ramping up of capex, production linked incentive that we call as PLI, and other schemes to revive consumption demand. Now, at the start of the lockdown, there was quite a debate, or there was quite a discussion actually. The private companies, they were wondering whether they should shift their manufacturing bases from China, because that was causing a lot of supply chain constraints. And somehow India could not benefit from this because and because we did not have such an ecosystem here, and Vietnam benefited from this, and hence we see that we are finally focusing on it through production linked incentives. Now, production linked incentives, the idea over here is that the government would forego some of its revenues so that new companies come here and set up their manufacturing bases. And that would mean what? That would mean more of employment in the long term, and investments, capex, basically, that is happening from the private sector. Now, see, the existing companies here, they are not doing much of the capex, and for government it is necessary that there has to be some participation from the private sector at least. So what better way other than this? Because to come to the government right now, it does not matter whether the existing company is doing capex or a new company is doing capex, as long as it's capex. We talk about the fiscal situation and response to COVID-19 pandemic. And the pandemic year 2021 has so far entailed fiscal challenges for the Indian economy, which were characterized by additional expenditure requirements directed towards ensuring basic means of sustenance and livelihoods for the vulnerable people, relief measures for MSME sector, accommodating additional health infrastructure and services to fight COVID-19, and measures to boost demand. Throughout this period, the government followed a carefully calibrated strategy in the management of expenditure. So again, coming back to that same point, that we have scarce or limited resources and we have to prioritize on it. And all the more, and this is all the more important when you are in a crisis. See, in any case, when you have limited resources, you anyway have to prioritize. But in a situation like this, you have to be very, very agile. Now, during the first two quarters of financial year 2021, ministries were classified into three categories. Ministry A, that were providing relief or welfare to the public. No expenditure restrictions were placed on these ministries. And then category B ministries, they were allowed to spend 20% of their budget per quarter. And ministry C, with low priority, they were allowed to spend 15% of the budget in each of the first two quarters. However, even in category B and C, ministries spending on domestic capex was permitted beyond these ceilings. So government did not mind which category of ministry was doing capex, as long as it was doing capex. And with effect from the third quarter, the spending ceilings were relaxed on the basis of revised full year allocations. So this paragraph basically talks about that, how we have to reprioritize according to the situation. And this graph that we see, we have anyway discussed it in some of the videos before. This is nothing but it tells us that how the government has actually increased its capex in this year when we compare it with the previous financial year. And then recovery in GST collections that we have already seen above in the first chapter. And now we talk about provisional outcomes for 2020, this current financial year. So when we compare FY20 period from April to November and same with the current financial year, we see that our tax revenues are down. We see that our non-tax revenues are down too. And our non-debt capital receipts, this is nothing but your disinvestment proceeds. In fact, this for the current financial year, we had a target of 2.1 lakh crores, and out of that, we have only achieved 18,000 crores. And this is actually strange that the government did not take much benefit from the boom in the markets, wherein we have seen so many companies getting listed. And then our non-debt receipts are low in comparison to the previous year. Now our non-debt receipts is nothing but our tax revenues, our non-tax revenues, and our non-debt capital receipts. The sum total of these three makes this component. And our total expenditure is close to 5% high Y on Y. Our revenue expenditure is close to 4% high, and our capex has gone high by 13% during this same period. Now, the shortfall attributed to a fall in all components of non-debt receipts, that is our net tax revenue, non-tax revenue, and non-debt capital receipts. So that we have already discussed here. The non-tax revenue collections up to November 2020 registered a decrease of close to 47% relative to the corresponding period. So this is Y on Y basis. This was led by a decrease in dividends and profits. Of course, see, we have already discussed how the companies their top line has been affected. So when your top line gets affected, somehow or the other, if there is not much cost cutting, your bottom line gets affected too, or in any case your bottom line gets affected. And this is how we see that, of course, if your bottom line is affected, how will you declare dividends like you would otherwise? And hence we see this. Now a very interesting graph here, growth rates of fiscal indicators in the current financial year up to November 2020. Now we see that gross tax revenues are down for the government. The corporate tax, the personal income tax are down as well. But excise duty is tremendously up. This is because in March as well as in May, the government hiked the excise duty in case of petrol and diesel. And let's say if we are paying 100 rupees for petrol today, close to 60% of that goes into the government's kitty. So 40% is what is the actual cost of it. And now we talk about expenditure on major subsidies. So we see that our subsidies Y on Y basis, again in period April to November, they are down 14% because most of the subsidies, food subsidies, our fertilizer subsidies, as well as the petroleum subsidies are down. Urea subsidy is mostly flat. And it's mentioned here that the decline in global petroleum prices acted as an important fiscal shock absorber during the current financial year, as it led to a decline in petroleum subsidies and an increase in revenue collection from excise duties, which we have seen above. Now, fiscal policy response. So, we see what India has done. Now, this is a very important picture, pie graph here. So, India did not announce any one-time grand stimulus. Instead, we announced it in phases. So, in first phase, we focused in primarily on the poor people, and this was actually a sad state for them. And we have seen it through news coverage as well, when sadly people had to go to their hometowns on foot. And this is during May June period when we had seen there was a greater push for liquidity into the system. And during October and November, there was a major focus on investments. Now, this is basically through the Atmanirbharta package. That is our PLI scheme. And this is it about this video. We will continue more in the next video. Thank you so much.